Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Thursday, March the 25th, 2010. Well, another red body candle today, and the red body tells us that the sellers have made some net bearish progress on the day. We can see in this candle, however, that we have a very large shadow on the top, and that represents the sellers coming in as the market traded up to this zone of resistance that we identified at 1179. When we pan back, we can see that that was a minor level of previous support right back here. And in this situation, that area has held today as an area of resistance for this market. So obviously, if the price action is going to continue to the upside, it will need to take out that area at 1179.79. So it becomes very important for further price appreciation in this market. If the market does trade higher, then we have some more resistance around the 1200 area, which is a round number and a fairly significant number for this market too. Now the sellers have closed the market down near the low, and that denotes that they closed the market in control. So we haven't actually had a change of trend at the moment, but the short-term dynamics are not supporting the bulls any longer. They're not supporting taking this market higher. Today's candle is an outside day. In bar chart terms, it's an outside day that raises doubt about the viability of the trend in the first time frame to the upside. The previous day's candle was, in bar chart terms, a bearish candle. An inside day, and some may call it a bearish harami pattern, and that's where the body of the candle is engulfed by the previous body, and there is potential for the market to sell off. Having said that, though, with the bears in control, the buyers losing commitment that they had when they traded the market up around this 1179 region, it doesn't look very healthy for this trend changing to the upside. But then again, the bears haven't been strong enough to actually change the trend either. Today's candle, the bulls were actually strong enough to take out the previous high from 2 candles ago, but certainly not strong enough to close the market up there. By the same token, though, the bears certainly weren't strong enough to take the market down below the low from 2 candles ago, so that could be significant for this market. And that low coincides with an area where we might expect to find some support at 1163. There is potential for strong support all the way down through to the cloud, and we have support at the Tenkan Sen 1161, then the 1150 region, which was previous resistance, and then at the Kijun Sen, which coincides with the previous area at around 1133, and all the way down to the cloud, down to 1086. So very, very strong support on the way down, moderate resistance on the way up. The fact that this area at 1179 was tested and there was strong downside price rejection has actually made that a stronger area of resistance now for this market. Now the market is trading up above the cloud or the Kumo, and a long way up above the cloud or the Kumo. And when markets tend to trade a long way from these areas of equilibrium, as denoted by the cloud, by the Kijun Sen and the Tenkan Sen, then they do tend to have a period where they need to relax and retrace back towards that equilibrium. So there is a chance that the market will retrace back towards there. Having said that, though, there aren't any really solid signs of that happening at the moment, and all of these areas of support may limit the extent of the retracement back towards this region. So that's in the big picture terms that the market is looking a little bit overextended. Having said that, though, if the market trades sideways for a while, as the trading days continue on, then the market will move towards a cloud that's actually rising. So the area of support or resistance offered by the cloud here is actually will be coming up to meet the price action if it continues sideways. So that could be significant for this market in the coming weeks. Now the market is trading up above the Kijun Sen and Tenkan Sen, which means in the medium term to fast term timeframes the market has a positive bias and it's bullish. and also the Tenkan Sen is above the Kijun Sen, which means the market's bullish. If we look over here to the Chiku span, that's simply the closing price today projected back 26 periods, and we can compare that to in a straight line down here to where the price action was 26 periods ago, and if that's above there, then that adds further weight to the bullish factors. The Japanese who use Ichimoku charts tend to use the Chiku span to confirm other indications that they're getting from the other Ichimoku indicators. So very strong support below. We're in a bullish market, overall bullish. So the probability will be that the market will want to trade to the upside, although the market is looking a little overextended. If it does trade to the downside, we have very well defined areas of support on the way down.